first, the elephant in the room is obviously the silver price collapsing and gold price collapsing as we speak. What is your take on the sentiment right now in the metal space?
Well, both are clearly in bear market territory now. They're down more than 20% from their peaks. And in fact, silver's down 50% and something from its peak. So the peak was $125. It's now, let's call it $62, $63. I mean, maybe it'll be $1 different when you publish this video. The thing which is causing the price, or which everybody says is causing the price fall, has been the prospect of higher interest rates due to higher inflation, and the higher inflation is caused by the war. So, traditionally we look at political crisis as potentially being good for precious metals, although in my career I haven't really seen any strong evidence of that. We're not back in 1945 where people had to fill their pockets with gold and cross the border. But despite the political tensions, they are causing the higher oil price, and the higher oil price will feed through to higher inflation. And that basically means the world is now expecting interest rates to rise. We've got a dead certainty of rises in Europe, the UK, and almost certainly in the United States later this year, probably in December. So higher interest rates, at least the nominal higher interest rates, make people think, I don't want to hold gold, I don't want to hold silver because there's a carry cost, I'm earning nothing. I might as well go into short-term deposits and earn some money. The other side of the coin, I think, is that people have been, up until maybe a week ago, although that's not turned around in direction, but people have been taking money out of gold and silver to put into the fastest moving assets. And the fastest moving assets have been everything to do with data centers, silicon, AI, all that sort of thing. So we've seen almost daily for the last few weeks, last month or so, almost daily, there's 2 or 3 stocks which got 10 or 20% on the back of some story. So a lot of people have been chasing that, saying, well, okay, I missed the last one. It's hurting. Gosh, I meant to buy this, or I meant to buy that. And now it's gone up 20%. So they're kind of running a little bit, trying to find the next one. And I think the money's been coming out of gold and silver miners and gold miners, going into the AI sector. Now, of course, that sector is, as we speak, looking like it's slowing down. It's up today, but it had a very bad day yesterday. So money looks like it's coming out of the bag a little bit. I could perhaps talk about that in a minute or two as to why I think we might have seen the best of it.
It does seem like we're seeing multiple factors here as you analyze that the prospect for higher interest rates is pushing the market down and gold and silver down. And we saw that high inflation number here in the US of 4%, the highest we've seen in years. Kind of laughable because obviously it's higher than that, but as the official number. And then we have as well, we have the SpaceX IPO coming out just tomorrow. We're recording this on June 11th here. And that you've mentioned is really sucking liquidity out of the market. Can you expand on that?
So the amount of liquidity being sucked out of the stock market relative to the size of the stock market is not very large at all. It's tiny, but it's at the margin. And we're still talking some $250 billion of applications for this $75 billion issue. So it's quite likely that people have raised cash to the tune of $250 billion to go into this issue. Now, it's not like $250 billion is a big amount relative to the total, but at the margin, someone is being sold stock when we're already in a rather overbought situation. So this sector, the AI sector, the large mega cap companies were rather overbought, meaning now there's sellers of some of those stocks trying to sell those stocks into an already overbought market. So there's a sort of reluctance from other people to buy the stocks off the sellers, which is why the stocks have been going down. But I think what's going, we will see how it develops, because once people have got their SpaceX shares, things will have settled down. I suppose the money probably will head back where it started from. Obviously, the nice thing would be if it goes in the direction of gold or silver. We don't see any evidence of that happening yet.
As we mentioned at the top of this interview, sentiment is extremely low in the precious metal space, where I am seeing on the retail side a little bit more action, people trying to buy the dip at the moment. But do you anticipate that we could be going lower before things get better? Or what is your outlook for especially silver, but also gold?
in the long run, I'm very confident that we'll go a lot higher. All the factors to drive the gold price and for other reasons the silver price higher are still in place. Nothing's gone away. But one thing they used to say in Wall Street is you never fight the tape. And the tape is going down. So gold is around just a tad over $4,000 as we speak. I would much rather be a buyer of gold at 4,400 than at 4,000. Now that may be hard to understand, but when it's at 4,400, you've got a feeling that it's now moving in the right direction. And I don't want it to go to 4,400 tomorrow. I want it to gradually grind up there until I say, gosh, I'm missing out on this. I got to get in. So this is the saucer. We're going down the saucer. We don't know if we're at the bottom of the saucer. It might be there, might be there, might be there, or we might be at it. But then I want to be actually getting a feeling I'm going up the other side. Now, there's no maths or chart you could look at to tell you exactly when you're there. You can only get a feeling for it. But right now, my feeling is that if you're a stacker, as I am, it's a great move to keep buying little by little by little. But this is, for those people who are sort of saying, I'm already at my peak of silver and I want more, I wouldn't go overweight in it at the moment. I'd wait for it to go a bit lower if it does and stack up. And if it doesn't, you're fine because you've got some silver already. But if you've got no silver, definitely start buying. That's my view. But that's not a prediction it's going higher tomorrow. We don't know that. But the point is, if you stack slowly but surely, you will catch the bottom of the saucer wherever it is. So we might be here, we might be there, or we're not yet, but we might be going up the other side.
You've mentioned people who are looking to, buy the dip and time the market can sometimes it's difficult, and it also might not be the right way to think about it. The dollar cost averaging might be better, because you mentioned in a recent article you wrote that if you're wanting to buy the dip, there will probably be, there might not be new all-time lows. There are almost certainly, we can't guarantee this, but in your view, almost certainly going to be many, many, many more all-time highs. So if I remember back when silver was, just breaking above 50, it came down a little bit. A lot of analysts were saying it's going to 40, right? And I was like, oh, maybe I'll wait to 40. Well, it didn't turn back, right? So if we're at 60, 3 or whatnot today, and we're waiting for 50, if you don't already have a good position or where you want to be, where you're comfortable at, waiting for the perfect time to put everything in, you might not get that opportunity.
I mean, that would be wonderful. We could put everything in at the bottom. But to be honest with you, I know of nobody who ever bought anything at the bottom, or of anybody who sold everything at the top. The way to play the game is you put some in and you put some in. So if you buy some at 50 and then at 45 and then at 40, then at 45, then at 50, then at 60, then at 70, then at 80. Yes, you might be quite annoyed that you didn't buy the whole lot at 40. And you'd be a little bit annoyed that you paid for some at 60 when it's now 80 and you could have paid 40. But at least you've got in at reasonable prices compared with where it will probably be. And I don't think that the all-time high we saw of 125 is where it's going to stop. There are plenty of people out there who think they know what they're saying, who are printing prices higher than the all-time high even this year. I'm hoping they're right. But what I can say is this: we're in a silver shortage. That's confirmed by the Silver Institute, where they're forecasting a bigger deficit in 2026 than there was in 2025. That deficit has to come from somewhere, and the only way it can come from somewhere is from sellers. So it's not going to come out of the mines, because the mines aren't producing enough. It's got to come from sellers of ETFs, sellers of physical bars or coins or recycled silver. And the way, although every ounce on the planet has got its price, and that price does move around according to how people feel, to get that silver to meet the demand, at some point, silver has to start moving higher. And when it starts moving higher, I think that becomes self-fulfilling. Therefore, people start to move their target price where I'm going to sell. So those who are willing to sell at 80 today are probably going to move their target price to 85. And so on. And then when it gets to near to 85, they'll move it up, because the momentum itself changes the way people think about what their target is. So on the way down, people gradually lower their target to 10 or 20% above the present price. But on the way up, they tend to keep their target 10 or 20% above where it is on the way up. So the silver price really has to rise to suck that silver out for the purposes of the industrial needs.